Good afternoon. This is Ron Brown. It's Saturday, March 14th, 2026. I'm doing this late afternoon. I thought I'd get a relatively short video out and do something a little bit different this time. As we all know, the market is weak and very dangerous. We don't know what's coming from day to day based upon what's going on with Iran. I mean, this could go on for months, but something is going to either cause a major break in the market or a major rally, and the odds are that it's going to be a major break at this point. Market like this is extremely dangerous to trade, so just protect your capital, and you can always come back later. Now I'm going to use sector analysis or do sector analysis using the warehouse and ranking modules. And remember, the market is your teacher, and we're certainly finding that out, aren't we? Any stock index or ETF mentioned in this presentation is not a recommendation to buy or sell. All trading strategies are used at your own risk. I have HCSI open, and the designer is in front of me. I want to show you where I am. If you go into the market analysis user groups and you go down to number 8, these are spider ETFs, or that's what I labeled it anyway, expanded, and there are several ETFs in here which are not in the S&P 500 ETF group because I want a broader look at the market. Now I'm going to look at these in both the ranking module and the warehouse module, and I may look at the ETF world view. These are ETFs I put in a folder quite a while ago from different countries around the world, and most popular ETFs. These are the most heavily traded ETFs, or at least they were at the time I put them together. I suppose I should make sure that that's still the case, but I think it's pretty true, or it remains true. Okay, going back to number 8, I'm already in there. I'll just click through to the warehouse, then click through to the ranking module. And with the ranking module, I've set this up for 10 weeks because we're 10 weeks into the trading year. January, February, and half of March. And as far as the warehouse, I'm just using the top-down view. Let's see, what am I using right here? For HCSI generated indexes. These are not HCSI generated indexes, but it shows the information I want to show, the change over different time periods. So looking at this, let's just start up at the top and look at the returns over the past 2.5 months, and you'll see that the XOP, the S&P gas and oil, is leading the list, followed by the energy sector, gold spiders, consumer staples, utilities, materials, and you can read these other ones or do this yourself. And then when we get down here to the mid-cap portfolio, everything is negative below that. So looking at some of these ETFs, you can see the short-term high-yield bonds are negative, communications sector, the XSD, which is another semiconductor ETF, real estate, total stock market, home builders, technology, and I'm going to scroll down. There's some more in here. The financial sector is really hurting. Insurance, banks, and so on. Anyway, it's a good way to track what's going on in these sectors, and every week you can just move this up a week. Next weekend will be 11 weeks out. Now, looking down here at the warehouse, And I'm going to primarily look at these columns right here. The days since the 3 crossed the 6. Both up and down, you can see as I sort on this, there's only 3 positive days, and one of them, the utilities sector, went positive yesterday. So if I bring this up, you can see that it was pulling back, but it evidently, I don't see the green, but it should be there. We can see that it crossed over right here. So here's the energy sector. It crossed over a couple of days ago. And then when I look at the XOP, this crossed over 45 days ago, which would be clear back in here somewhere. Other than that, everything else is negative. And some of these have been negative for quite some time. Banking, I said up here that banking was weak, financials are weak, home builders are weak. You can see that these crossed down 21, this crossed down 21 days ago. The bank ETF, home builders crossed down 17 days ago. Here's more financials, banking, regional banking, 15 days ago, retail spider, 15 days ago, and so on. Here's high yield bond fund crossed down 11 days ago. So there's just weakness all around. If you just look at this by itself, sorted on the percentage price change one day, you can see that there's red in here for the 1 day, beginning of the week, 5 day, and 21 day. So the only ones that have shown consistent strength will have several days of green, and there's only a few of these. The rest of these, as you can see, are red when compared to looking back 21 days in this column right here. So when I look at the markets like this, using ETFs, I get a quick read on where the strength and weakness is. And this can be done every day, but it's overwhelmingly negative right now. Okay, let's just drop down to the world view and transfer that to the warehouse. And you can see that there's not a single ETF where the 3-day exponential moving average is above the 6-day. And most of these crossed down several days ago. These just crossed down 2 days ago. Brazil, gold, QQQ, and silver. Let's look at QQ. Okay, it popped up. You can see a little green nub right here on this day, or actually this day right here as it was holding up. Red candle, but the 3 still went up through the 6, and then it reversed. But you can see there was really no or very little movement to the upside. There was accumulation with the Qs. All of these green bars that close near their high, those were accumulation days, but the last couple of days it is failing just because the overwhelming negative sentiment in the markets. Just look at this, how long this has been going on. This sideways movement. Let me see if I can draw a box around this, or all of this time here went from trending up, pull back up here to the high, and then it's just been in a trading range all of this time. It got up at the high here and then fell back. So it's building up a lot of energy to go one way or the other. We won't know which way, but if this market does hold together, I would not be surprised to see more reaccumulation like this. But if it, with world events and the price of oil and all of the negativity, I don't know. It's got a lot of things going against it, but it's amazing how it is tracked sideways for so many days. But other than that, these are the short-term crossovers to the downside. Everything else has been going down for quite some time. Let's just take a look at the FXI. And it turned negative back here. But you can see that there is some accumulation going on here with these green bars. Why do I say accumulation? Because most of these bars, not all of them, you can see that they closed higher than the open and the lows. So that suggests accumulation, especially when you compare the green bars here and the volume here, and then the red candles here. I said bars, I meant candles. Red bars here with the low volume. It just means there's not a lot of selling pressure here. Okay, let me tile this again. Well, or just go back down here. So as far as what's happened since the beginning of the year, the South Korea iShares are up 21.45%. If I click through to the warehouse, you can see it turned down 9 days ago. Still managed to hold up 21.45%. The gold spider, of course, is still up, but it turned down only recently. Silver turned down recently. Both gold and silver. Let's look at gold. The big run was here, and then it's been basing sideways all this time. Also, silver probably looks similar. After the big break, they're not letting it go down anymore. Traders aren't. So anyway, this is kind of a nice way to compare any time period. You can do it for a month, but I'm just doing 10 weeks. If I change this to 2, it'll show me the last 2 weeks. And you can see that these are all negative over the past 2 weeks. Let's go back up to number 8. The only thing positive, I went back up to folder number 8, oil and gas and energy. Everything else is negative over the past 2 weeks. I'm going to go back to 10 weeks. So, reviewing this in the warehouse, the ETF worldview, there's nothing positive, no 3 above the 6. And for 10 weeks, I had to resort that. You can see where the strength has been. I'm just going to go down here to the most popular ETFs. These are heavily traded ETFs. And over the 10-week period, the USO is up 73.85. Much of this has been coming this week or the past 2 weeks especially. And if I click through to the warehouse view, you can see that it crossed over 18 days ago. The Ultra VIX and the Ultra Pro short, these are the ETFs that are positive here. Now there's that oil fund, and here's the other oil fund. So 6 of these most popular ETFs are positive on the 3-6. Doesn't mean they're still going up, but they're positive. Well, this looks really nice here on the energy sector. Let's just run through these. You can see this has been moving up as the market has been moving down. So is this. It hasn't really moved that much yet. Oil fund. Bitcoin's been moving up. We have an ETF here that represents Bitcoin. And then, of course, the XOP. And finally, the energy sector. Now, I'm not saying that the 3-6 is the perfect indicator, but it just gives me a good idea of short-term strength. That's why I like to use it. I haven't mentioned the force index. It's over here in this column. I'm just primarily concentrating on the 3-6, the ranking module, and the warehouse module. That's all I'm going to do today. Just a little different way, unique to HGSI, where we can look at the ranking, warehouse, and 3-6 crossovers. Thanks for listening. Have a good weekend, and let's hope this war doesn't get too far out of hand. Probably already is, unfortunately.